All right, good afternoon, everyone. Today is September 12th, 2012. It is a Wednesday. If you have not taken a free trial with us, you can go to www.cfrn.net/apply and take the free trial. Okay. If you go there and you fill out the two little things that we ask for, it's just your name and your email address, you'll be sent an email that's got links in it with a video that explains to you how to download all of these indicators that you see here, all the charts, the data platform, the whole thing, how to get it all. And you get all that stuff for 5 business days. You also get to sit in our live training room for 5 business days, 2 hours per day, from 9:30 a.m. to 11:30 a.m. Eastern Time. That is that is our free trial. All right, you get to sit in the live trading room and watch us place all the trades that I'm about to go over here, and learn how all the indicators work. To some degree, some people learn it all. I'll pick up more than others, but you get to sit in there and do everything with us, okay? And we are there to answer your questions. A reminder to everyone who is a partner, tomorrow night, partners meeting, 9 p.m. Eastern Time. Every Thursday night, we have a partners meeting at 9 p.m. Eastern Time. To everyone who is in here on a free trial or who has been on the free trial, if you want to become a partner, you should have an invoice, or not an invoice, you should have an email in your inbox, is what I mean, with what it takes to become a partner, okay? If you're interested, let us know, okay? It has my phone number right in there. You can call me directly if you want, and I can answer any questions you have or walk you through the process, tell you whatever, what different options we have and all that sort of stuff, all right? All right, now moving on to the markets. Let's see, on gold, I'll just go through the results. The NQ, we were minus 6 ticks. The ES, we were minus 8 ticks. The YM, we were minus 7 ticks. Gold, we were plus 9 ticks. I know we had a few losing trades there, but they're all small. I mean, when you think about the NQ, it was minus 6 ticks. That's minus $30 a contract. The YM was minus 7 ticks. That's minus $35 a contract. The ES was the big one. That was minus 8 ticks. That is minus, $100 a contract. So all three of those together is minus $165 a contract. On gold, we were plus 9 ticks. We started out gold plus 17 ticks, which was plus $170 a contract. And we ended plus 9 ticks on the gold, which puts us at minus $75 on the morning session. Okay, minus 1.5 roughly on the ES equivalent. And that was on the trades that I took. All right, if you managed to take more trades than I did, because there were many more available, if you didn't take the ES trade, well then that was $100 right there by itself. Or if you just stopped after the initial trade, where I took a gold trade for 17 ticks, then you were definitely up on the day. Anyway, getting into it, we finally had a little bit of range. It took a while for it to actually come through and happen, but the range today was 1439 all the way down to 1433. We had 6 points range in the day. You can see right here on the ES, after we got the bearish cross, price dropped down, and we were waiting for everything to drop down through the weekly trading zone, and we shorted it when it pulled back up to it. Obviously, that short did not work out. It stopped us out. After going sideways for what seemed like a very long period of time, it stopped us out, and it moved right up here. I had drawn in these trend lines this morning. After it moved up there, I had drawn in these trend lines. Usually, the way that things have been working, Dwayne had identified this pattern since Thursday. After we put in a higher high on the day, we would go down and test this weekly trading zone, 35.36, drop through it, then come back a little bit, and then just sell off afterward. That's what the pattern has been for the last few days. What it's done today so far is drop through it, came back up, went through my stop, hit these trend lines, and we'll see if those trend lines are going to hold and if it's going to drop off here. All right, that was the only trade we took on the ES this morning. All right, over here on the YM, let's see, on the YM we have a bearish cross right here, a pullback up test of the BBC, and I had shorted right here on the YM. I had 8 ticks risk on it. I don't know why it stopped me out at 7, but I had 8 ticks risk on it, and I ended up with minus 7 ticks on the trade. It must have just flipped up there and tapped the 8 and slipped me a tick in my favor. But anyway, I got minus 7 ticks on it. It kept going up after that, came back down, tested the BBC again right here, but it was going into the weekly trading zone, so obviously that was during our break, and it's going into a zone, so we're not going to take that trade. That was our one losing trade over there on the YM, our one losing trade on the ES. Now on the NQ, I actually had a winning trade and a losing trade. This was my one losing trade right here on the NQ. We had a bullish cross, a test of the BBC with an up close. It went up, hit the MA1. The MA1 held it in, pushed it right back down. Now there were many opportunities in here on the NQ. If you go through and check this bearish cross, test of the BBC, down close with bearish divergence. Another one right here on the long side. I think this might have been the one. I think this is the one that I had taken a couple of ticks on to get back from. I was minus 8 after this first one, and I got back to minus 6 on this one right here. I had told everyone in the room that we had bullish divergence. Test of the BBC with an up close at 27.85 was an opportunity to get long right there, and I did get long, and it went up a little bit, and I moved my stop up to break even plus a couple of ticks, and it stopped me out at plus a couple of ticks. All right. There were a couple more opportunities in here. On the short side, there was one right there that went for about, looks like about 4 or 5 ticks. The market was pretty tight this morning. There was bullish divergence right here. What we're looking for, guys, the setup is this. And on all the 4-tick range charts, this is the setup. Every 4-tick range chart, this is the setup. You look for the MA1, which is this blue and red line up here on price, to cross up above the green line, which is the BBC. Price to pull away from the green line, pull back down and test it. When it tests it, you want to look down here for divergence. Divergence is the green line moving away from the cycle portion here. Okay? It tests it, and then it starts to move up. If it closes up, that's when you look to enter. So you would look to enter this trade right here. All right? Right there for the long trade. Possibly could have done it again right here, but after 2 closes beneath the BBC, I usually don't like to take the trade. There was another opportunity right here for 6 or 8 ticks. It turned down right over here, but we didn't have any divergence by the time it got over here. Okay. And right now we actually have bullish divergence right here. That's bullish divergence. A bullish cross is testing the BBC. We need an up close to go long. All right, an up close to go long. Let's see, over here we have a bearish cross, pullback test of the BBC, and a down close. Over here, bullish cross, test of the BBC with an up close. This was the one that I lost on. I'm just scrolling back because I think I might have missed a couple here. Alright, and that was pretty much it on the NQ. Now you can see I did not take every single trade. Had I taken every single trade, we would clearly be up on the day. Assuming just 5 ticks profit per trade, we would still be up on the day. Let's see, what else do we have here? I want to show you guys gold. Alright, here is gold. Now, you know what, I'll blow it up a little bit here so we can look at it a little closer. Like that. Alright, now this was my first trade on gold. I was watching this one right here. I'll do one more. I was watching this one right here, but it didn't pull back and actually touch the BBC, and then we watched it drop about 20 or 30 ticks. The next one actually came up here and touched the BBC. Now we're looking at the same thing. Again, this is a 4-tick range chart, so you look for your bearish cross, you pull back test to the BBC with a down close with the bearish divergence. Oops, bearish divergence, like that. This one didn't actually test it, so I let it go. This one did test it, and it closed down, and I got short right in there, and I took that down for 17 ticks. Alright, now what you anticipate when you have this kind of divergence, what you anticipate happening is this green line is going to work its way down into the cycle. Alright, all the way down into the cycle like that. Alright, all the way down into the cycle. And that's what we were looking at. Alright, so I wrote that one down for 17 ticks. It pulled back up here, and it tested the BBC right here. It went through it, actually, and by this time the cycle was headed up, so we weren't looking to get long on that. The next opportunity, this one I lost a few ticks on right here. It came down, tested the BBC, gave an up close, and we had the bullish divergence, so I took the long trade right here on the up close. It stopped me out, and then it eventually went up a little bit right here. Okay, I took another one right over here. This gave me a break even. Actually, I ended up slipping a little bit, and I lost a tick. But I took right here on the pullback and tested the BBC with the up close. I got long right in here, and it pulled back, almost stopped me out, and then went back up here. I ended up taking a break even on it over here. Okay. Let's see, those were the only trades that I took in the gold. I ended up positive on the gold. I didn't take any more of these trades in here. Let's see, everything was a little. Once crude numbers were released, the crude oil came out here. Gold jumped all around with the crude oil. And then once it settled down a little bit more, we had a bearish cross, tested the BBC with a down close with some bearish divergence. Bullish cross, tested the BBC with an up close with bullish divergence. More bearish divergence right here. This one right here, an up close. It drew down a little bit. This one drew down 1730.7. It drew all the way down to 1730.0. I use an 8-tick stop, so that would have been okay. And then it moved up from 30.7. It moved up to 32.9. That's 22 ticks or $220 a contract. The next one was right here. We had a bullish cross, pullback, tested the BBC with an up close with bullish divergence. Okay. Now, I know there's a bunch of people in here, and I know that those of you that come in here every day, you listen to me just go through these trades over and over and over again. Same thing every day. But if there's anybody in here for the first time, and this stuff is new to you, ask questions, because I'll answer your questions. I know I'm making a recording right now, and I'm doing a recap, but I'll still answer your questions. All right. Even if I don't put them into the recording, if I answer them after, I'd be happy to answer your questions. If this interests you, you can do this on larger time frames. It doesn't have to be a 4-tick range. In the morning sessions, I have 2 hours to do my trading to show you guys how things work and that it does work. So I trade on a faster time frame to make sure that there are trades generated in that 2-hour window. You guys could trade this on whatever time frame you want. The same logic applies. All right. Now, moving on just a little further, we're getting into, well, it's after 11 o'clock here, but we had bullish divergence right in here. Bullish cross, tested the BBC, up close right there for about 8 or 10 ticks. Again, the same thing, bullish cross, tested the BBC with an up close with the bullish divergence down here. And that one was good for 34 up to 36, another 20 ticks. And guys, this is $200 a contract right here, this little move. $200 a contract. Keep that in mind. All right. And that was pretty much it on the morning session. There was plenty of opportunity there. We ended up positive on the gold on the morning session. Most morning sessions, there's going to be opportunity in the gold. If, let's say, for instance, you had 3 contracts on and your goal was, I don't know, we'll say your goal was $500 a day. With the 3 contracts, my first trade would have generated $510. I would have been done after that first trade. Okay. Let's see, that was the NQ, the ES, the YM. I didn't do crude. I didn't take any trades on crude, but I didn't show you crude either. Crude had, crude inventories came out today. They were expecting a draw of 1.8 million barrels, and they had a surplus of 1.9 million. That made crude jump around quite a bit. I don't know what I just did. That made crude jump around quite a bit. Oops, I think I accidentally just closed that chart. All right, well, I guess we won't do crude because it would take me too long to put it all back together. But crude had some opportunity today as well. All right, I didn't take any trades on the crude, but there was opportunity to be had. Again, if you have taken the free trial and you want to become a partner to get into the partners meeting tomorrow night, you need to take care of the email that is sitting in your inbox. If you have any questions about it or about CFRN altogether, give me a call. My number is in that email. If you do not have that email in your inbox and you are interested, send an email to support@cfrn.net. Support@cfrn.net. And we'll get all the information out to you as soon as possible. All right. If you are a partner, there is a partners meeting tomorrow night. All right. With that, I'm going to stop the recording.